In this video, I'll be sharing with you guys my trendline entry secret. I'll share with you how to draw trendline properly. Right, so we have situation where we have price creating diagonal, or what we also call dynamic support and resistance, which you can use a trend line. Like when price comes and reject from a zone once, twice, you can start catching very big moves like this. Price comes and hit, you enter. Price comes and hit, you enter. Price comes and hit, you enter, until when the trend changes and it start going up, you start catching the moves up. So with this trend line strategy, you have the opportunity to use a very small stop loss. Right, imagine you are able to enter a trade here, and then your stop loss just a little bit above there, above the trend line, and you're able to catch this move, which can give you 1:2, 1:3, 1:5 ticks to the ratio, and it can help you build a very small account. So there are many people who get it wrong because they draw trend line wrongly. There are some things they don't understand about trend line, so I'm going to be sharing with you those little secrets that will help you enhance your trend line trading. So you want to watch the video to the end. It doesn't matter what market you're trading, trend line strategy works for all markets. So
okay, traders, welcome to my channel. I am Full Kingsley. By the grace of God, I bring you guys strategies, tutorials on the forex market, volatility indices, metals like gold, Nasdaq, VIX75, many other instruments. You want to subscribe to the channel by hitting on the subscribe button and notification bell to not miss out.
So now, in drawing a trend line, first of all, the first thing we need to understand is we are drawing a trend line based on what? A trending market, right? We draw a trend line based on a trending market, a market structure that is creating lower lows and lower highs, or higher highs and higher lows. For instance, this is a downtrending market and this is an uptrending market here, isn't it? So now we are drawing a trend line. You want to expect those situations where price pulls back and get rejected in a trend line. For instance, if price is in a downtrend, meaning it's creating lower lows and lower highs like that, right? It means that what? Price will pull back up to find rejection in a trend line, isn't it? So when price pull back up, what can help you to know if the pullback ends is by drawing a trend line. And when drawing a trend line, you simply pick your trend line tool, and then you connect the highs, right? You pick from the high where it's obvious. Oh, take note of that word, that a high that's obvious. You know that you can get as many touches as possible, so you connect like that, right? So when you get the connection, you are simply connecting such that if you get the first and the second touch, right, from the third touch you are going to start selling, meaning that when price has rejected once, twice, from the third touch you are going to now start taking your sell, because from this third time it is already acting as what? It's already acting as resistance. Okay, dynamic resistance. In this situation, price can come back the third time, the fourth time, you still enter, and then you keep on riding the trend until the trend line breaks out. Now the mistakes many people do and how to draw trend line properly. Now notice that when I'm drawing my trend line, I pick an obvious high like this, I draw across the top of this second week, isn't it? So this is actually what we call the peak, PEAK, right? This is a peak where you draw and cross across. Okay, so you ensure that you get the touch, right? People draw and then they draw, sometimes they don't touch, they draw like this. When you draw like this, you are going to miss the setup because you don't know if the trend line actually touched. Or some people draw and they are not very careful, or they are not very skillful, they draw across the week like that. When they draw across the week, if price comes a third time, it's going to, you know, you are going to feel like maybe it has broken out. But if you make sure that you touch the wicks properly, you drag, right? You see that when price comes the third time, you are going to enter, probably the fourth time. All right, there are times where price can close a little bit above, but if you see the next bearish candle it closed below, then the trend line still hold, right? Those are the things you should note about trend line. And you also use what we call candlestick patterns to confirm. All right, so this is the example here. Let's take this week here, this zone, for an example. Now if you look at it, we have beautiful zone here. Okay, we have a beautiful zone here, and we don't want our trend line to be too steep, right? There's a difference between a trend line that is like this, okay, and then a trend line that is like this. Okay, now we want to be using trend lines that are a little bit gentle, because the more gentle a trend line is, the more sustainable it is, right? So that's why most times you realize that I don't use the highest zone when I'm doing a trend line, because when you use the highest zone, the trend line tend to be steeper, isn't it? That's why you see people will asking me in my trend line videos that why did I not use the first peak? But in some situations, if you use the zone below, right, the trend line will not be as steep. You get the point? It will not be as steep, and that will make it more sustainable. So sometimes it depends on the situation. I will prefer taking from this high here. So like what I explained, what I do is I pick this here, isn't it? Then I pull. Just look at how I do, right? Okay, so if you look at it critically, you see that I pick from this high and I just drew across the wicks of this. So when I just drew across the wicks of this, all right, I've already established, a diagonal resistance or a dynamic resistance, and I'll be waiting for price. From the third touch, I'll already be entering. So from there, you can already see this is an entry setup here. See that when price came, rejected, came again, rejected, we saw what? Strong bearish momentum. Now, this bearish momentum is what? A candlestick that has been rejected downward with a wick pointing upward. So this, in essence, is explained in the fact that we have the bulls that try to push price up, right, for the body of the candle to close, but the bears overshadowed and push price, and it closed below this zone here, indicating what? Bearish pressure. And for the fact that we have this to be a resistance zone, a dynamic resistance, we take our sell trade there, and then we have our stop loss above that candlestick. So you can place it above the wick of this candlestick, right? You have your first target here, then your second target somewhere, right? And then you see that price drop, right? So what you simply have to do is you just extend the trend line, you extend it further, and then you wait to see if you get subsequent touches, isn't it? So you just extend it, make sure that you just extend it, right? So let me just do that, so that let's see how the trend line is going to be respected. So you just to drag it down. All right, so from dragging it down like that, we already have one setup that we cut here, and that's already a very big risk to reward ratio, guys. That can be more than 1:3, 1:4, which is good, right? So you wait. Okay, you can see price comes. All right, you see that, all right, and then you wait again. You see if price comes back to the zone. All right, and then there's another thing I'll tell you guys, that you can use multiple trend lines. For instance, this is considered as the measured trend line. Price start getting other lows like this, all right, you confirm, and then you can see connect, use another trend line, and then you connect it like this. For instance, you get when you connect like this, now you cut across, you see that this is another setup, because this was once, twice, and thrice. You see now that price drops, but now these ones are not very sustainable because they are steep. You get the point, but you can still catch this move, because when price reject once, twice, you see now that it came back. Now you saw this candlestick rejection. What happened? Price drop. You see that could have been a trading setup. Now you see what I said, they are not very sustainable. You see now that price books out. Now when price comes, we got another rejection in the measure trend line that we drew. So here is our entry, and then our stop loss above there, and then we extend it below, right? So we extend it, and then we'll see how price move. You see that price drop. So those are two quality trades that we have got so far, and then we are still waiting. Now if you look at it, price creates other lows, isn't it? So now in order to catch other smaller moves, we can see connect like this, right? You see now that price has created this low. You get now, you see that, you see another trading opportunity based on the minor trend line. You see that if you have this knowledge, you will not be missing too many opportunities here. Now you enter with your stop loss above there, and then this one you don't want to be targeting a zone that is too big, because it's not the major trend line. You see that we still cut this move, guys. So just imagine how many setups so far. Just look at it, just by having this knowledge that I'm sharing with you. These are how many setups that we have already cut. Look at that, look at that, look at this, look at this. This is another setup here. As you can see, this was another setup based on the minor trend line, right? This is another setup that was based on the minor trend line. See, because we had this 1, 2, 3. In fact, this is another setup, as you can see here, right? This is another setup. 1, 2, 3, 4. This is another one here. 5. This already 5 setups, guys, just by having this knowledge, and they all went well. So you can further extend the trend line. You can continue extending it, all right, as long as the trend is holding. Now you see it's very sustainable because the trend line is steep, right? It's gentle, it's not as steep. So you see it's quite sustainable. You get the point. So now you see extend. So probably would have entered here. Okay, we have entered here. Let me just use another entry. All right, and then we'll place our stop loss above the trend line zone like that, above the candlestick, and then we'll get stopped out. So that's fine, right? So if you catch 1, 2, 3, 4, 5 opportunities and you miss one, guys, this is nothing, because just look at the stop loss size, look at the risk to reward ratio that we use. So that is basically how you can use this trend line technique, and you really scale up on your entry. And now you see now that price has broken through the trend line, and then all of a sudden you're going to probably see that it start creating what, higher highs and higher lows, higher. So I hope you found the video helpful. If you found it helpful, please give me a thumbs up. Make sure you subscribe to the channel by hitting on the subscribe button and notification bell. Let me know in the comment section below if this is helpful to you. Thank you for watching, and see you in the next video.